Welcome back. Markets are kicking off the year positive. Take a look. First trading day of the new year. We have the markets expected to be up 30 points on the Dow Industrials. S&P is up 5 right now, and the Nasdaq up about 7. Let's talk about expectations. Dagan, we had obviously a record year in 2017. 25% higher on the Dow, 28% higher on the Nasdaq. Expectations for this market in 18?
All of the analysts who are looking at this market see more gains in the months ahead and the year ahead. I'll point to the Wall Street Journal. There's room for the editorial page. There's room for missteps, and two of the three. One is geopolitical risk, but then Trump does something on trade that is a major misstep, and then the Federal Reserve. And I'll point to the article in the paper today. In cities with low unemployment, wages finally start to get bigger.
18
and
states.
I think that inflation is going to be a concern, could be a headwind, and particularly if the Federal Reserve hikes interest rates too fast.
And then there's the agenda, James. I mean, earnings have really benefited from the rollback in regulation and the anticipation of tax reform. Now we're going to actually see what this tax plan does for earnings.
That's right. We're going to get the policy, not just the expectations now. And there's a lot of reason for optimism about the U.S. economy, the world economy. As you've noted, you've got Asia and Europe looking strong. Europe, they're talking about taking away the central bank monetary stimulus maybe late in this year. This is really encouraging to have economic growth happening not through sort of government tinkering, but through real people in the private economy making investment. And a lot of good news in the U.S. on manufacturing, and you talked about the growth. So I think it's hard not to be optimistic about the U.S. economy right now.
Really quickly, because you were referencing the hikes in minimum wages. I'm just talking about wage inflation, natural wage inflation in places like Denver, Colorado, where the labor market is so tight that people are starting to see real increases in their paychecks, which is healthy.
That's going to be the conversation at the Fed, that's for sure.
We have tight labor supply here because our jobs unemployment rate is so low right now. So I would think that does put upward pressure on wages this year, that we finally get some wage increases. That would be important. And to James's point, we are no longer hooked on this monetary morphine from the Fed. I mean, that's all we talked about, or at least a lot of what I talked about for the past 3 years was what is the Fed doing? Now it's what is the White House doing? What is President Trump's economic agenda? How will that drive the markets? And that's what's really important right now.
Maria didn't laugh at me, but I said, I think the last jobs report when we were on this show, it's like, how hot's too hot? And you sat back and said, we're actually asking that question now, is how hot's too hot? What if the Fed makes a mistake? And it is astonishing.
Yeah,
it
really
really
is.
astonishing.
By the way, the tax plan, I was a little surprised at the rate of repatriation. Does the money come back with a 15% repatriation rate? You wonder.
Well, since they basically get taxed regardless, I think a lot of it will come back. We'll see. We're not running the experiment, and there's no barrier now to bringing that back and investing in the United States.